So this happened in 2024, and if you're like me, I was jumping up and down. Finally, some relief from my mortgage payment. I also had clients calling me in December like, wait, did the feds just cut rates? Is it time to refinance? But then the opposite happened. This is what happened to mortgage rates from last year to today. They went up, even though rates were cut here, here, and here. So the big question is, why did that happen? And is the same thing about to happen in September 2025? All right, so here's the deal. If you're just watching the headlines, you're probably thinking, sweet, the feds are cutting rates. Mortgage rates are about to get lower, but that's not how it actually works. Now, I've looked at this stuff a lot. I mean, I've walked over 500 families through this exact mortgage puzzle. So here's my game plan for this video. First, I'll show you the exact rate the feds actually control and why it doesn't lower your mortgage the way, that most people think. Then I'll show you the real number you should be watching for if you care about mortgage rates. And trust me, almost nobody looks at this. And finally, I'll share what this means for you in 2025 and 2026, plus some advice I give my own clients about whether it's smart to wait or buy now. By the end, you'll know exactly what's driving mortgage rates, and you'll be able to call the BS on all those headlines. All right, so let's start with this chart. This line right here is the federal funds rate. That's the one that you hear all over the news, that the Fed are cutting rates and everyone's like, okay, awesome, this is gonna be awesome. But it's basically the overnight rate banks charge each other to borrow money, just in plain simple English. Now, let me show you what happened in 2024. In September, the Fed cuts rates for the first time in years. Then in November 2024, they cut rates again, and again in December 2024. So that's 3 cuts in a row, and you might be thinking, that's amazing. Now, if that really controlled your mortgage rates, what you would expect the mortgage rate line to do is what? Exactly, you'd think it would go down too, because 3 rate cuts, so mortgage rates should go down too. But here's the crazy part. Look at what actually happened. Mortgage rates went up when you're looking at the mortgage rate line compared to the federal funds rate. And I'm not kidding. This is where I had people blowing up my phone. They'd say, wait a second, Nathan, the feds just cut rates a lot, but why are my mortgage rates going up? And that's a fair question, right? Because the way it gets reported on the news, they purposely kind of make it misleading where feds are cutting rates and then they just kind of talk about housing. So they kind of like intertwine the two, which is kind of misleading. But the truth is they're not intertwined exactly one for one. So here's the big reveal. The Fed funds rate is important, but it's not the number you should be watching for if you actually care about mortgage rates. And it begs the question, if this isn't the number that matters the most, then what is? If you're planning on buying a home in the next 12 months, check out my homeownership free trial guide. It's a process that I made where you can find your comfortable budget for free before you even own a home. And I think you're gonna like it because I spent a lot of time creating it, and you're gonna see these fun little doodles that I drew out because I do believe that clarity creates confidence. And if that all sounds interesting, check the link in the description. Let's jump back into the video. All right, so here's what nobody tells you. Mortgage rates don't follow the Fed rate. They follow this blue line right over here. That's the 10-year Treasury. And here's why this matters for you. If you're waiting on relief for your mortgage, which a lot of people are, especially if they're interested in real estate and mortgages, this is the number you need to watch for, because when the 10-year Treasury drops, mortgages usually drop right behind it. And when the 10-year spikes, you guessed it, mortgage rates go up as well. So you'll see in September 2024, the 10-year Treasury dipped, and so did the mortgage rate, which was amazing. And it just so happened it was also similar timing with the federal funds rate. And that's why everyone was like, okay, Fed rate got cut, mortgage rates went down, which was awesome, but then feds got cut, the federal funds rate got cut in November, but then mortgage rates went up. So in November 2024, if you remember, the federal funds rate went down, but here you can actually see a clear pattern that mortgage rates went up as well as the 10-year Treasury went up. March 2025, you guessed it, same exact thing. And in July 2025, we saw the 10-year Treasury dip, and guess what? Mortgage rates followed. And what I'm doing right now is actually helping a lot of clients refinance in August and a little bit in September as of recording this. So I know there's been a lot of technical terms, graphs, and all this fancy words, but I want to boil it down into a simple analogy that I remind myself to better understand. What's the Fed rate? What's the 10-year Treasury? What's mortgage rates? And how are they kind of related to each other? So I like to think of this almost as like a road trip. The federal funds rate, or the Fed rate, is like the speed limit on the freeway. It tells cars how fast they should go. But between you and I, we all know that some of the drivers don't go the speed limit. They either go faster, some slower, etc., right? So that's the Fed rate, that's the speed limit. And then the flow of traffic, that's the 10-year Treasury, like how fast those cars are moving, ignoring the speed limit. It's just a recommendation, right? That almost reflects on how all the drivers, or the investors, I make the connection that the investors are driving the cars, figuring out how fast are they actually moving. That's the 10-year Treasury. And the drivers are charging you for a certain rate to go from point A to point B, right? They're charging you an interest rate. And you and me are the home buyers or the passenger. And you don't get to control the speed, you're just along for the ride. If traffic speeds up, your ride smooths out and mortgage rates improve because it's smoother, predictable, etc. But if there's a traffic jam or fog ahead, because there's unknown, you don't know what's going on in the near future, the drivers and investors slow down and therefore you slow down too. Like I said, remember, we're the passengers, we're just along for the ride, and whatever the drivers or investors are charging us for their rates, we just are there for along for the ride. So that's why mortgage rates follow the traffic or the 10-year Treasury. So that's the important number to look at, not the speed limit that the Fed rate set. So again, I hope that analogy helps. And if you're like, wait a minute, that's a lot of information, just replay back this section, because I think once you hear it once or twice, you're gonna be like, oh, I get it. 10-year Treasury, mortgage rates are awesome. They're one and the same. The Fed funds rate is just the speed limit, a recommendation on what the driver should be driving. But between you and I, we all know some people drive faster, some people drive slower than the speed limit. Okay, so if mortgages follow the 10-year Treasury, what does that mean for you in 2025 and 2026? Like, what's the actual practical advice that I can take away from these videos? Because like I mentioned, like when I watch these videos about, oh, the rates are getting cut, it's like, okay, cool, thank you, but like, what does it do for me? So that's what this section is gonna be about. Now, let's have some real talk here. So if you want to be told what you want to hear, you're probably not gonna like this section. But if you wanna be told what you need to hear, because I think that's what's in everyone's best interest, just telling the truth and being transparent, here's the brutal truth. If the only way that buying a home makes sense for you is if mortgage rates drops from 6 to 5.5%, I'd really encourage you to hit pause just for a second and ask yourself, why do I actually want to buy a home right now? And the reason why I'm saying that is you're going to put a lot of pressure on yourself to make that 6% to 5.5% work. And like, if that's the only thing that makes financial sense for you, the extra $200 a month, then you're going to put a lot of pressure on yourself, and a lot of things could go wrong because there's multiple parties involved. There's like the sellers, you, the buyer's agent, listing agent, lender, escrow, title, insurance agent, appraiser, home inspector. That's a lot of things that are out of your control that you're trying to force into in control, if that makes sense. And what I always tell like people that are asking me, like, hey, what should I do? Is try not to focus on perfect timing, because again, you have to have all these stars align and you're gonna put a lot of pressure on yourself, and it's almost like a pressure cooker. What I'd focus on is perfect preparation, which I'll elaborate in more detail in a second. Anyways, when we focus on perfect timing or this perfect everything's gonna happen, that almost leads to what I call analysis paralysis. And analysis paralysis means no decision and you just freeze. So you end up being stuck on the sidelines waiting for something that may or may not happen the way that you pictured it, right? Because like I said, there's like a lot of factors that are not in your control. Now, don't get me wrong, the financial side matters. Of course it does, right? It doesn't mean like pay an extra $1,000 a month for no reason, but I want us to look at the whole picture. And a lot of families that I've helped didn't just buy because of the numbers look perfect. They bought because they wanted more control or more ownership over their lives. And here's what I mean. One of the most common things that I hear, which is actually quite surprising, it's not, I want to buy a house to build wealth. It's like, I just want to be able to have a dog because my landlord won't allow it. That's actually very common, more than you could think. Another one I hear all about is like, hey, I want to renovate or, make the house the way that I want to in the place that I live. But if I upgrade my rental, I'm just helping the landlord pay for their vacation, and then they can charge more rent, which makes no sense, right? So in that situation, they just want to be able to renovate or customize their home that they want to. Or it can be as simple as, hey, I'm just tired of the rent going up every single year, or worrying about that landlord that could sell the place out from right under me. And that especially happened in 2021, 22 as well, because home prices skyrocketed. And then sellers were like, oh, sweet, I'm just gonna cash in on this. So those reasons matter just as much as the financial math, sometimes even more, right? So again, it's a part of the equation, but not the whole equation. And look, I don't just talk about this stuff, I live it too. I own a home and rental units myself. If I only pulled the trigger when rates were perfect, I'd still be waiting today. Instead, I looked at the bigger picture, and that's what let me actually move forward. So here's my takeaway. Don't buy just because you think rates might drop. If you're like, this needs to happen to perfectly time everything, I would reconsider the actual why you're actually looking at buying a house. Because renting actually makes sense sometimes, right? You actually put a roof over your head, you have a lot of flexibility, and it's usually more cost effective than buying. So please understand your why. Buy because you know why you want to own, If you've got a strong why, the when becomes a whole lot clearer. As always, I try to put everything into making the best videos in the mortgage education space. And remember to grab your homeownership free trial guide down below. It's completely free, and I think it'll save you a ton of time and headaches. If you like this video, give this video a like, subscribe, and comment what you want to watch next. Also, if you're curious on what the 7 mistakes first-time homebuyers make, click this video right over here. I think you'll like it. It'll save you a ton of time from mistakes as well. I'll see you there, and I'll catch you on the next one.